If you are incorporated in Alberta, missing one of these three important mortgage documents can turn a very solid file into comeback in 2 years. And the worst part is most business owners do not realize it until they've already started house shopping. They think my corporation made good money, my business is busy, my accountant says I had a strong year, so naturally they assume getting approved should be easy. But the lender is not asking did your company do well, they are asking what do your documents prove that you made personally, and can we verify it? I can take two incorporated business owners in Alberta, same industry, same revenue, same lifestyle, and one of them gets approved fairly smoothly while the other one gets told to lower their purchase price, put more money down, add a cosigner, or just come back in 2 years. In this video, I'm going to show you the 3 documents incorporated owners need to qualify for a mortgage, explain what each one tells the lender, and break down why your company making strong money does not automatically mean you qualify. Make sure you pay close attention until the end, because document number 3 is where most files either start making sense or completely fall apart. My name is Ushindi Mutabazi. I'm a mortgage associate here in Alberta, and I specialize in helping self-employed Albertans like yourself qualify for a mortgage without waiting 2 years for income averages, paying more in taxes, or changing the way that you run your business. Before we get into the 3 documents, there is one thing you need to understand. Lenders are not approving your corporation to live in the house. They are approving you. That does sound obvious, but a lot of owners miss this. They always send me a message on Instagram and tell me the company is doing very well, my company did 400K, 600K, my business had a great year. But the question I always ask them is, how much of that did you keep as personal income? Because the company revenue is not the same thing as the personal qualifying income. And that right there is typically where the disconnect is, because your corporation can be doing amazing and your mortgage file can still look much weaker than you expected. To avoid having a weak application, the first document you'll need is your T1 General. This is your full personal tax return, not the corporation's. This is where a lot of incorporated owners get surprised, because from a tax standpoint, you may be doing a great job. You keep income in the corporation, write off legitimate expenses, and pay yourself efficiently. This is 100% smart tax planning. But smart tax planning and strong mortgage qualification are not the same thing. Lenders are not qualifying you based on how successful your business feels. They are qualifying you off what is documented and what they can use to confirm that you will pay off the mortgage. Think of your corporation like a kitchen. There can be tons of food in the kitchen. The shelves can be full, the fridge is full, everything is stocked. You just went grocery shopping. But not all that food is going to make it onto your plate. Your T1 shows the lender what personal income actually made it onto your plate. The lender also wants proof that CRA actually processed that return, which brings us to document number 2, your notice of assessment. So if your return was filed but not assessed, that can create questions. And if there's tax owing, that can also become part of the conversation. Just by having those first 2 documents, your T1 General and your notice of assessment, you are already positioning yourself ahead of 90% of other owners. This video is sponsored by myself. If you're looking to buy a home in the next 6 months, or just want some clarity on your current position and where you stand, click the first link in the description and complete my 3-minute mortgage readiness quiz. It's completely customized, and once you complete that quiz, I will personally record you a custom video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. This is not automated, it's me doing the work. Also, make sure to follow me on Instagram at It's Ushindi for more self-employed mortgage advice, or if you have any questions and just want to chat, a link for that will be in the description as well. Let's get back to the video. Document number 3 is actually more of a set of documents, and these are your corporate income proof documents. Depending on the lender and the file, the package can include your corporate financial statements, your corporate tax return, business account statement. These documents, along with your T1 General and the notice of assessment, help the lender connect all the dots and get a full picture of your income. The documents in this package help explain what is happening inside the company. Is the corporation healthy? Is the income story consistent? Do the business numbers support the way the file is being presented? Owners typically get frustrated because in their mind, the company is successful. They know the money is there. They know the business is operating. But the lender is not just checking whether your company exists. They are assessing whether the income is reliable, understandable, and documentable enough to support the mortgage you are looking to get. A strong corporation does not automatically rescue a weak personal income presentation. Your corporation may have returned earnings. It may have a strong year. It may even have cash sitting inside of it. But if the personal side of the file looks fairly light, the lender may still view the application and just say no. Revenue is not salary. Revenue is not dividends. Revenue is not personal income. Revenue does not automatically qualify you, and this misunderstanding is why two owners with similar businesses can get two totally different approvals based on how their story and their documentations are presented. One has a clean story, the other has a messy one. One has organized documents, the other assumes the lender will piece everything together by themselves. Underwriters do not reward confusion, they reward clarity, consistency, and clean, organized paperwork. Before you get emotionally attached to a home, the first thing you have to do is follow me on Instagram. After you follow me on Instagram, then pull together these 3 document buckets. And don't just find them, actually analyze them. Ask yourself, what does my personal income actually look like on paper? How do I pay myself? Does my T1 tell a strong enough story? And does my notice of assessment support it cleanly? You want to think, if a lender reviewed this file with no previous knowledge of me or my business, would it make sense right away or would it create confusion? The goal is to prove that you qualify cleanly as the borrower with documents that tell a clean, presentable story. If you need help finding or understanding any of these documents I mentioned in this video, feel free to send me a message on Instagram and I would be happy to help. The link is in the description. Also, if you're looking to buy a home in the next 6 months, click the link in the description and complete my 3-minute mortgage readiness quiz. Once you complete that quiz, I will personally record you a video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline, your goals, and your documentation.